Rahul. नाम तो सुना होगा.
You might be wondering how Shah Rukh Khan's famous dialogue from a rom-com has slipped into a startup story. But the main character of this episode is a Rahul who has made sure his name will be remembered in most tech investor circles. Needless to say, Rahul Yadav is a known name in the Indian startup ecosystem already. About a decade ago, Yadav had made it to several 30 under 30 lists and cover pages of magazines as the young maverick founder of Housing.com who had dared to disrupt the real estate sector. But what had made him an even bigger talking point was a public showdown he had had with Sequoia Capital in 2015 over his management style and his brash behavior. 8 years later, Yadav is back in the headlines again, this time facing off against another mighty investor, InfoEdge, which owns a majority stake in Yadav's current company, 4B Networks.
Housing.com founder Rahul Yadav's 4B Networks is facing heat from its majority shareholder, InfoEdge. InfoEdge has initiated a forensic audit against the prop tech startup after it alleged.
And unlike last time, where Yadav had been kicked out of the company he had founded due to his behavior, he has now been accused by his latest investor of serious digressions. The bad boy of Indian startups finds himself facing a forensic audit by his investor, as well as criminal charges by employees and vendors. Will this one be a bigger fall? To decode what went wrong and what possibly lies ahead, I spoke to ET Prime's Priyanka Sahai, who did an exclusive interview with the founder who has become synonymous with trouble in the startup world. We also speak to Sriram Subramanian, founder and MD at corporate governance advisory firm InGovern, to understand what the big red flags were in this whole fiasco. It's Tuesday, the 13th of June. I'm Mugdha Warrior from ET Prime, and you're listening to Rahul Yadav, Trouble Magnet or Troublemaker on the Morning Brief. A dropout from IIT Bombay, Rahul Yadav seemed to be intent on disrupting the real estate market with tech when he launched classifieds platform Housing.com in 2012. He also successfully sold that idea to investors. And mind you, not just any investor. He picked up checks from SoftBank at a time when the Japanese conglomerate hadn't backed many Indian startups.
For Housing.com is all set to raise fresh funds. Now we're learning from sources that this could be in the range of about $60 to $70 million and could value the company at close to $500 million.
But Yadav seems to trip over his own personality often. In 2015, spat with a big investor such as Sequoia Capital had spilled out into the public domain when Yadav sent coarsely worded emails to employees calling out the venture capital firm's alleged intrusiveness. The episode culminated in high drama and finally in Yadav's ouster from the company.
Ending the long dramatic events, the board of Housing.com has fired co-founder Rahul Yadav as CEO. Today in a board meeting, the company has cited his behavior towards investors, partners and the media as the main reason for his ouster.
After that, Rahul Yadav seemed to have receded into the background, though he did manage to convince the brainy Bansals of Flipkart to back a startup soon after, which however never took off. He then went on to work with real estate firm Anarock as its chief technology officer. And that stint was not half bad for Rahul Yadav, who claims to have bought a Maybach at the time he was working for the firm. But the entrepreneurial bug is almost impossible to shake off for people like Yadav. Sure enough, in 2021, Rahul Yadav was wooing investors with another idea: to disrupt property tech, or prop tech as it's called. He wanted to connect builders, buyers, brokers, and banks, or the 4Bs as he called it. On this premise, his company 4B Networks managed to rope in one of the most reputed names of the startup world, Sanjeev Bikhchandani-led InfoEdge. 4B Networks was helping builders get site visits by potential buyers to their properties through brokers who were then paid a commission per visit. Rahul Yadav also wanted to add several more layers to it, including invoice financing and facilitating home loans. But he needed money to scale his business. A lot of it. InfoEdge pumped in a massive 288 crore rupees into the startup in less than 2 years, increasing its stake to around 60%. And mind you, the investment came not from the InfoEdge Ventures, which is the fund it uses to usually invest in startups, but from the balance sheet of the main listed company itself through a subsidiary called All Checks Deal India Private Limited. But then, when Yadav asked for more money, InfoEdge said enough. And they asked him to show how the money was being used. And what did Rahul Yadav do in response? He told InfoEdge he would not share any company information for InfoEdge's regular disclosures as a publicly listed company. You heard that right. Rahul decided to bargain. He said he would share more information if he received capital in return. We reached out to both Rahul and InfoEdge with queries and requests for participation in this podcast, but we didn't receive a response. But I dug a little deeper into this and spoke to people close to the issue about what was going on. They told me 4B Networks was in fact contractually bound to share financial reports monthly with InfoEdge, which Rahul then stopped sharing soon after raising the last funding round in September of last year. Now, what is really interesting here is that InfoEdge, which was a majority stakeholder in the company, didn't have a board seat. Strange, right? People I spoke to said that given that InfoEdge has invested in around 80 companies, they prefer taking board seats only in companies which grow big and in which the value of their stake is substantial. But from what we understand, InfoEdge thought it had control through an agreement with 4B Networks, which stated that any important action would need the approval of InfoEdge's subsidiary All Checks Deal India Private Limited. And like I mentioned earlier, key business metrics data had to be shared monthly in a meeting with InfoEdge. Nevertheless, this approach by InfoEdge turned out to be a big mistake. As it turns out, InfoEdge has now written off the entire amount it had invested in 4B Networks and is now looking to do a forensic audit of the startup. People close to InfoEdge think there are unbilled revenues, adventurous accounting, siphoning of money to a separate entity, and more such possibly fraudulent behavior. It has appointed Deloitte to do the audit, which will entail access to the company's servers and email. Will Rahul Yadav oblige? He seems to be willing. At least that's what he told my colleague Priyanka Sahai in an exclusive interview he did last week for ET Prime. I spoke to Priyanka to understand the whole trajectory of the company better. Priyanka, you got hold of the man who is at the center of a big storm right now in the startup ecosystem. First, I want to ask you, you've talked to him at the time of the whole housing.com episode and the meltdown that happened, and he was ousted from the company. You've talked to him then. After, over the years, you've talked to him, and now when he's right at the center of another storm, you again connected with him. Has anything changed in terms of his approach, his attitude?
Massive difference, I'll tell you. Even though, the jury is still out on what's happening at his company, there's a forensic audit which is pending. Let's not touch that part. But I'll just tell you, as an entrepreneur or as a human being, what I noticed different was he's evolved. Or at least that's how he appears out to be. And unlike how he was in the past, he went ahead and, had a clash with a set of VCs. There was a boardroom meeting fight, which became kind of a public point of discussion. Here, he is apologetic. Here, he is hopeful. Here he's asking for forgiveness. Here he's saying and he's accepting. It's a mellowed down version of Rahul Yadav. He's just, during my entire 75 minutes of conversation, all I could hear him say was that, hey, I have changed. I have matured. It's been like I have gone through a 10 years journey. I've had my share of experience. I know I was young and brash at some point in time. I'm not that person now. I just need another chance. And that's what he's been consistently saying and requesting InfoEdge as well, as even as the company is expected to go through a forensic audit.
Just to get a sense of what a younger Rahul Yadav was like, here's a clip from an interview he had done 8 years ago when he had resigned from Housing.com after a very public spat with investor Sequoia Capital.
Have you sorted out your differences with the board right now, or should we expect you to quit the next time they don't agree with something?
So I don't think there are any differences.
Okay.
People who know me from the college time, they know that this is how,
Okay.
this is the way I work. And there are many investors who are there from last 2 years with us, and they already know how Rahul is, and it's normal. I mean, it's just different people have different personality, and I think they are used to it.
But he says that he's changed and he's matured and all of that. But then he goes and pulls off something like refusing to share details with a company which has a majority stake in your company. And that InfoEdge is a publicly listed company which needs to disclose data timely and regularly. I mean, what was he thinking there?
That's exactly where irony strikes, right? In the conversation he had with me, he again categorically told us that I immaturely went and started negotiating with InfoEdge. I thought if I'll ask them for certain set of approvals by not giving them the required data, given that they're a listed company, they might come under pressure and perhaps agree to abide by my requests or by my asks. And there comes for everyone, it is there for everyone to see. It's again an immature thing to do, right? And he's even accepting that. He's saying that I did something which was immature. Perhaps I shouldn't have done that. But all this realization is happening after he did that. So as an entrepreneur, as a 30-year-old, as somebody who's seen the pros and cons of the ecosystem, these are some of the things which are not expected of a professional, but yet things are repeated. So yeah, you were right. While there are claims that he's learned, perhaps there's room for improvement and learning more nuance.
Priyanka, can you just explain to us what the business model was at Broker Network? What was the main revenue channel for him? And interestingly, in your interview, he says that the center of this whole disagreement between him and InfoEdge was one particular feature, which is instant brokerage or invoice financing. If you can just walk us through that.
Absolutely. So let me tell you in a very layman's terminology, it was basically a matchmaking platform which would connect brokers with properties, which is the builders, and then the buyers. Essentially, it was just acting in maybe say like an e-commerce parlance as a marketplace wherein people from different domains will come at one platform, and thereafter they'll be able to figure out where the inventory is and perhaps whether they can take it forward from there. The bone of contention in this case was another feature which Rahul was working on. And as he claims, it was in agreement with the investors, which was a transaction platform that he was trying to set up. So once a buyer comes to your platform, selects a property, goes for a visit, then after he likes, in case if he or she likes that property, then he can make the transaction then and there.
So then he says he's gotten approval. Then what was the issue in terms of building that and scaling that?
So see, we'll have to understand that these are claims made by Rahul Yadav, right? We haven't yet heard from any of the investors officially as to what the bottleneck was. But as we speak to some of our sources, what we gather is that essentially a transaction platform has to be foolproof, right? In India, there's so much of policy and so much of regulations around transactional platforms that you really have to be thorough with specific details of what you're building and how safe that platform is going to be. So basically, we are sitting currently with very limited information on what went wrong. because his claim is that the investor had approved of this model, while the investors claim that he burned excessive amount of money, and that too at a time when there's so much of funding crunch in the market. So this has less to do with the business model that he was working on and more to do with the way he splurged money, perhaps not taking his investors in confidence.
Let's just pause here and let me try and address one point I'm sure you might be wondering about. Why did InfoEdge decide to back Rahul Yadav in the first place, especially after his infamous clash with his previous investors? People close to the publicly listed company say that InfoEdge thought the idea of a property tech company enabling a charge per site visit by a potential property buyer was a worthy one to back. In fact, they were hoping that the startup would start getting fixed fees from builders and that the fee would eventually be hiked. InfoEdge thought that the transaction-based model could help it get more depth in the real estate market apart from its classifieds platform 99 Acres. And Yadav apparently convinced the InfoEdge management that he had matured since the Housing.com incident, and they seemed to believe him. In fact, InfoEdge, like I said, went on to invest a massive 288 crore rupees in the company, and this came through multiple tranches, the last of which was as recent as September of 2022. But then, things started to go wrong soon after. Here's what Priyanka has to say.
So perhaps the vision was good. Perhaps the methodology was going in the right direction. But it kind of crashed. And let me also tell you, all of this has happened in the last 4-5 months. Before that, even as per my sources at the investor side, as well as from Rahul Yadav himself, things were going in a smooth direction. There were beta tests that were happening. But in the last, I would say 4 to 5 months, a quarter and a half, after he realized that things were perhaps not going in the direction he wanted it to, after InfoEdge perhaps refused to put in more money, which he would have otherwise wanted to, things went sour.
Another sour point between the two companies was Rahul Yadav's decision to seek debt. Yadav, we understand, wanted to raise 100 crore rupees in debt to fund the business, but InfoEdge was against it. Sources say it was mainly out of concern about the capability of Yadav and his company to repay the debt, since InfoEdge was spooked by the excessive cash burn at the startup, given that 4B Networks had burned through nearly 60 crore rupees in its first year of operations to generate a revenue of 18 crore rupees. Priyanka, like you said, they've put in a massive 288 to 300 crore rupees in a company. And where has all that money gone? I mean, of course, InfoEdge is also asking these questions. And funnily enough, I mean, in your interview, when you've asked him about allegations that he spent 80 crore rupees in 6 months,
Yeah.
he corrects you and says that he actually spent 90 crore rupees in 4-5 months. But, what does he have to show for all of that? For the 288 crore rupees that he took from InfoEdge?
As we speak, the company has come down to practically nothing. There's not even 100 people working. From a peak of 2,500 employees, sometimes last year, it barely has 100 odd of them. And that is also people who are stationed out of their homes. Now, whether or not they're working on what they're working, nobody has any clue about it. Most of them have not been paid any salary for the last many months. So essentially, the company is not in a functional condition. Now, when we talk about what did he do with so much of cash burn? So the claim is that there was an app which was sent for a beta. There was a feature that we've spoken about. It's invoice financing. The fact that a transaction gateway was kind of formed, that was a big breakthrough if the entrepreneur in this case has to be believed. But broadly, that was what it was. There's nothing more and above this.
And in fact, another contentious issue between the two parties was the fact that Rahul Yadav wanted to start facilitating home loans. And apparently, he even set up a home loan entity before he even took approvals for it from InfoEdge, is what we understand. apparently InfoEdge wanted it to be shut down and he created it into a separate entity. Now, you yourself have asked him in the interview whether he knew that this fell into a gray area. And he definitely doesn't seem to be justifying himself very clearly.
So, Mugdha, as we know, the business started off a home loan segment as well, for which InfoEdge wasn't keen. And the investor asked Rahul Yadav to shut down this business. But what he has claimed is that he didn't want some 1,000 employees to lose their jobs overnight. And that is why he decided to hive that entity off into a separate venture altogether. Now, this is something very interesting and also a bit of a gray area. Basically, Mugdha, the claim here that has been made by Rahul Yadav is that he didn't want to take away the jobs of people who were working on this home loan vertical. And the point is that this is not an alien concept for any company in the tech world. Layoffs are happening, right? And more so, even 4B Networks, for that matter, has been laying off people. In the last 6 months, 7 months, 8 months, every month there's been a churn, right? To say that a step as stringent as this was taken to ensure that he could save jobs of people is a little far-fetched. And is also a big gray area and a red flag, because if an investor is asking you to shut a vertical, you have to shut a vertical, right? You can't be creating that into a separate entity and then trying to run it in a full-fledged manner. And remember, this separate entity, for all practical purposes, would not be having a stake from the investor. So InfoEdge would not be an investor in a hived-off entity.
Reports suggest that another director on the 4B Networks board, Devesh Singh, happens to be Rahul Yadav's brother-in-law. This again brings to mind past incidents such as that at BharatPe, where family members were put in important positions by founders. And then there were also concerns of related party transactions when 4B Networks, for instance, acqui-hired a startup from which it had rented its first office, as per reports. But Priyanka, apart from all of these, there are clear criminal complaints now against Rahul Yadav by employees, by vendors, etc., because he apparently asked employees to take loans to pay salaries to all the other employees. And he also hasn't paid off vendors. So there are all these criminal complaints. How does he plan to get out of this mess?
So, yes, you're right. The vendors have filed cases in NCLT as well, non-payment. And in this case, all Rahul Yadav has been insisting for is another tranche of investment. He's been saying that there was one bridge funding round. So the idea was that come January and he would hit the market, and he says he was very confident of raising X amount of money. That didn't happen. Now, as that happens, from a peak of 2,500 employees, the company currently barely has 100 employees, and that too either working from home or not involved in the day-to-day operations, because people have not got their salaries for many months, right? So people are not willing to work, and rightfully so. Now, what he is insisting, he has requested InfoEdge for some money and some level of reassurance, promising that he has the ability to still take the company forward and rebuild it from where it has fallen to.
Yeah, I mean, it came across in your interview that he seems to want to revive the company, reconcile things. But what is the sense you're getting from InfoEdge? I mean, will that ever happen given how this whole issue has played out?
Doesn't look like that way at all, because see, InfoEdge is a listed company. And given the kind of complaints it has received from employees, from the kind of cases that are pending from the side of the vendor, there's a lot that InfoEdge is also answerable to people, to the management, to the authority. Now, all InfoEdge wants to do right now is to get a forensics done. Because if somebody is clean, people should not hesitate going through the radar. So, given the circumstances, it is only fair for a forensic audit to take place, which will then clear off a lot of these things. even if money transfer didn't happen, where did that bunch of money which was invested in the company go?
Where did the money go? That is the key question. But is it too late for InfoEdge to ask that question now? They seem to have simply ignored huge red flags through the past 2 years. To make sense of the severity of some of these lapses in governance at Rahul Yadav's company, I speak to Sriram Subramanian of InGovern. Mr. Subramanian, thank you so much for joining us. We've seen a lot of cases of governance lapses and governance issues across several startups in the past few years. But what is peculiar to this case is that there is a publicly listed company, InfoEdge, which went on to acquire a majority stake in a very young startup by this founder, Rahul Yadav, who had, of course, had some trouble before in his previous startups as well. Now, what happened here was Rahul Yadav stopped sharing information with the publicly listed company, and InfoEdge needs this information to give updates quarterly to its investors. So, it looks like there was a complete breakdown of communication, of necessary financial health communication between the two parties. How do you look at this matter? Is this any kind of a violation of rules?
At one end, InfoEdge owned 57% or thereabouts of 4B Networks, which is Rahul Yadav's company. Though it's a subsidiary, but I think it was viewed more as an investment, because at the end of the day, the control that InfoEdge had over the management, which is Rahul Yadav and his team, seems to be very less. So from that perspective, there is no commonality of management, there is no commonality of founders. So to that extent, though it's a subsidiary, it's not a subsidiary with control. So to that extent, I think what Rahul Yadav has done to InfoEdge is he has not provided information, and that information InfoEdge obviously subsequently been communicating in its quarterly updates with investors on a timely basis. But can SEBI initiate any action against 4B Networks? I think that is for InfoEdge to initiate, not for SEBI, because SEBI controls the listed entity, regulates a listed entity, which is InfoEdge.
So you're saying that it is not mandatory, even if it's a subsidiary of a public company, but it doesn't have that control. It's not mandatory to share the information?
No, I would think that, in good faith and in proper good governance, obviously 4B Networks should have shared information with InfoEdge, which InfoEdge shares with the public at large. But the fact is that 4B did not share information, and so while it is mandatory to the extent that InfoEdge is a listed company and it has a 57% shareholding, it was not a loss of intent from InfoEdge, let me put it that way, which was regulated by SEBI.
So, Mr. Subramanian, InfoEdge has now decided to write off the entire amount of 288 crore rupees that it had invested in 4B Networks. How do you look at this move, and how do you think shareholders will look at it?
See, obviously, it's a big blow to any company, but given the market cap of InfoEdge and its cash position, probably they are comfortable writing off the amount. The board took a call on that matter. One. Is it's a hit to the books, because InfoEdge also acts like a VC arm. It has investments in other entities also. It is not just one entity that they have invested in. Obviously, write-off doesn't mean it is completely not making efforts to recover. If it recovers any amount in future, it will obviously write it back into the books. But as of now, from the P&L and the balance sheet, they have sort of written that amount off, which is a blow to the shareholders for temporarily, but given the size of InfoEdge, probably not debilitating for InfoEdge.
So, Mr. Subramanian, the main question is, what are the red flags that publicly listed companies such as InfoEdge should watch out for? In this case, do you think there was opacity of information and InfoEdge didn't know what was happening?
Yeah, I would think so, because at the end of the day, either they did not have access to the right information or they did not seek the right information. They went behind, or if at all there were board meetings of 4B Networks on a quarterly basis, they did not seek right information at those board meetings. or whether they had representation, or if they had representation on the boards, they believed all the numbers that were shown to them. So at the end of the day, they were taken for a ride from the media inputs and those kind of things, reports and all. So definitely there is an element of fraud. One, two is an investor, if they invest, they would definitely think that the management has at least good intentions. The business prospects may be good or bad, but at least the intentions of and the integrity of the management should be good. And this is not just a learning when investing in private companies, it's also a learning when investing in public listed companies, right? I mean, we all say that we are focused on good governance companies. Investors need to not invest in badly governed companies, which do not share information, which have other issues of board independence and the like.
You mentioned what the board could have done, but from what we understand, InfoEdge did not even have a board seat at 4B Networks, despite being a majority shareholder. Isn't this strange?
Yeah, so this is where it is. See, again, the information that you give is true. When InfoEdge has made such a big investment and they hold 57% shares, why did they not even seek a board position in the first place? Second, if they have at least contractually, they should have sought a board position. And that would have been a big red flag if the founders had not signed on to InfoEdge being on the board. That itself is a pre-due diligence red flag. But in a rush to capitalize on an investment, maybe InfoEdge took those decisions.
Coming to some of the other governance issues, these related party transactions and having family members in important positions seems to be a common thread now across a lot of the startups where governance issues have come up. I mean, what should investors, what should the board do about this?
No, at one end, obviously, when companies are small in their growth phase, they may rely on relatives for skill sets, or for keeping the cost low in their growth phase or in their formative stages. But when they become bigger, when they seek $10 million or millions of hundreds of crores of rupees, investors should definitely keep a tab on whether relatives on the board are occupying positions that they're qualified to occupy in the first place. Two, what are the checks and balances? Whether there are external people who are also inducted in the company who have some level of oversight, whether the CFO, for example, could be external nominated by the investor so that there is some counterbalance to the founders. Like Byju's, for a long while, did not have a CFO. I mean, despite taking in billions of dollars, it did not have a formal CFO role. That itself is a red flag.
Also, in this whole episode, one thing that has come to light is that Rahul Yadav also set up a separate entity without InfoEdge's approval. He also seems to have diverted some money to this new entity. How can that happen? Isn't that a violation?
A founder setting up another entity and moving monies from this company where he has taken outside investors to that without proper disclosure to the investors itself is a big red flag, right? I mean, even if somebody were to move 1 rupee or even a few lakhs of rupees from one entity to another entity where you are a founder of both entities, you should rightly inform the investor, which has not happened, I guess, in this case. And Rahul Yadav may claim whatever, but it looks like it is a blatant fraud because especially if it's in the competing space and he has moved people also there, then what was the purpose of taking investor funds in this entity?
Rahul Yadav says he has changed, but he really doesn't seem to have changed much. 8 years after leaving his first startup and 2 years into running his third company, he has still managed to attract trouble. What happens from here? The forensic audit might throw up some more clues of what really went down. But the bigger question is, why are so many founders playing fast and loose with governance? And why are investors, even the most reputed ones, missing so many red flags? Are there more such cases yet to surface in the coming months as the funding drought continues? That's all in this episode. I'm your host, Mugdha Warrior. and thank you for listening to The Morning Brief. This episode was produced by Surohini Jain and sound designed by Indraneel Bhattacharjee. Executive producers Anupriya Nair, Arijit Barman and Anirban Chaudhary. Do like, share and subscribe so that you don't miss any episode of The Morning Brief that drops Tuesdays, Thursdays and Fridays on a listening platform of your choice. All clips used in this episode belong to their respective owners. Credits are mentioned in the description.